Welcome back, deep divers. Today, we're taking a deep dive into the motivational forces behind financial success. And to guide us, we're turning to a book that really turned heads when it hit the shelves, Rich Dad, Poor Dad by Robert Kiyosaki.
It's amazing how Kiyosaki uses those contrasting mindsets of his own father, the poor dad, and his friend's father, the rich dad, to show how people can see money and work so differently, even if they both seem successful on the outside, right?
Absolutely. And he doesn't shy away from really challenging some of those deep-seated beliefs we have about wealth. I mean, remember when he says, your house isn't really an asset? That one really made me think.
Yeah, it's a perfect example of how Rich Dad pushes us to question things, to analyze how money actually flows in our lives. He wants us to get that difference between something that just looks like an asset and something that truly puts money in your pocket.
So let's dive into that. He talks about this rat race idea, that feeling of always working just to cover expenses, like a hamster on a wheel.
Oh, that image. It's spot on, isn't it? And Kiyosaki links this directly to motivation. He says that poor dad mentality, focusing on job security and that steady paycheck, can trap people in that cycle. They're driven by fear and scarcity, not the possibilities of building real wealth.
Okay, so I see where this motivation piece is fitting in. So if the poor dad is all about the paycheck, what's the rich dad alternative?
Rich Dad flips the script. Focus on your asset column, he says. Things that generate income, things that make money work for you. And he argues that it's this change in focus, this motivation shift, that separates those who achieve real financial success from those stuck in the cycle.
I can see how that'd be motivating. It's not just about working harder, but smarter. But what kind of assets are we even talking about? Most people can't just buy up a bunch of rental properties.
That's where financial education comes in, and Kiyosaki really hammers that point home. Don't just accept what you've been taught about money. Get curious. Learn the rules of the game. Then you can start building your own asset column. Maybe it's real estate, maybe stocks, maybe building a business. The point is, have those assets working for you, generating income even when you're not actively working.
It's like shifting from fear to possibility opens up a whole new world of options.
Precisely. And Rich Dad says it's not just about the money itself. It's about the freedom and the choices that come with financial independence. You're not working because you have to, you're working because you choose to. Now, that's a powerful motivator.
So how do we actually break free from that poor dad mentality
Yeah.
and start building that rich dad motivation? It sounds fantastic, but how do we really make that shift?
Well, Kiyosaki pinpoints 5 major roadblocks that hold people back. And you know what? They're all rooted in fear, doubt, and lack of self-belief. We've got fear itself, then cynicism, laziness, bad habits, and finally, arrogance.
Wow, 5 roadblocks. That's a lot to unpack. And you're saying these are all tied to motivation.
Absolutely. Let's take fear. Kiyosaki says the fear of losing money, fear of failure, can stop people from even taking calculated risks. They're so afraid to mess up, they never even try.
So they're motivated to stay safe, even if it means staying stuck.
Exactly. And cynicism plays into that too. That voice in your head saying, this will never work, or it's all rigged. That negativity is a motivation killer for sure.
And laziness. I can see how that'd be a roadblock, but how's the motivation issue?
It's not just about being physically lazy, it's mentally too. Unwilling to learn, grow, put in the effort to improve your money situation. You're essentially saying, I'm not motivated enough to change, or it's too much work.
That's fascinating. Even laziness, which we think of as lacking motivation, is driven by a deeper fear or lack of self-belief. It's like we're protecting ourselves from possibly failing by not even trying.
You got it. And that links right into the next roadblock, which is bad habits. Think about it. Those habits, whether it's overspending or not tracking your finances or making impulsive decisions, they're often driven by avoiding discomfort.
So we're motivated to seek that instant gratification instead of waiting for the long-term gains.
Right. And then there's arrogance. Might seem odd, but Kiyosaki argues it can be a huge obstacle. It's that closed-mindedness, refusing to learn and grow because you think you know it all.
So a false confidence, masking a lack of motivation to truly understand how the game works.
You nailed it. And that can be incredibly dangerous because it stops you from seeing opportunities and learning from those with more experience.
So to break free from these roadblocks, we need to tackle the root motivational issues, right?
Yeah.
Shift from fear to possibility, scarcity to abundance, fixed mindset to a growth mindset.
That's it, exactly. And Kiyosaki gives a ton of practical advice and exercises in Rich Dad, Poor Dad to help readers make that shift, to cultivate that rich dad motivation.
I'm feeling pretty inspired to dig into those strategies and exercises.
One thing I find really fascinating is how Kiyosaki ties this whole motivational shift to action. He's not just saying, think positive and the money will appear. It's more like, change your mindset, then take action based on that new way of thinking.
So what actions are we talking about? Because I think a lot of people get stuck in that analysis paralysis, learning, planning, but
Yeah.
never actually doing anything.
You're right on the money there. Kiyosaki is all about action. He lays out a bunch of steps you can take to build that asset column and start creating a life of financial freedom.
Like what? Give me an example.
Well, he talks about minding your own business, and I know that sounds kind of vague, but he's not saying quit your job and become an entrepreneur, although, that's always an option.
So what does he mean then?
He's saying focus on building your own asset base separate from your job.
Uh,
It's creating multiple streams of income, having your money work for you, even while you're working for that paycheck.
Okay, that makes sense. So it's not either. You can keep your day job and still build towards financial freedom. But how do you actually do that?
Kiyosaki breaks it down into some simple but powerful steps. Reduce expenses, he says. Live below your means and use that freed up cash flow to acquire assets, not liabilities.
So it's being intentional with spending, making choices that support your long-term financial goals.
Exactly. And he's not just saying cut back on lattes. It's about really looking at your spending habits and finding areas to cut back without sacrificing your quality of life. Then use that money to invest in things that make you money or go up in value over time.
So what are some examples of those income-generating assets? He talks a lot about real estate, right?
Real estate is definitely a big one for him. He likes that it's tangible, something you can control, and it has the potential for both cash flow and appreciation.
But isn't real estate risky?
Mm.
I mean, it takes a lot of money up front, and the market could always crash.
There's always risk with any investment. But Kiyosaki argues that not investing is even riskier because inflation is constantly eating away at the value of your money. He's not saying jump in blindly, though. He says it's important to educate yourself, learn how to analyze deals, and find mentors who can guide you.
Right. It's about managing that risk through knowledge and planning.
Exactly. And he also talks about the power of leverage in real estate. You can use debt strategically to get more properties with less cash down, boosting your returns. Of course, you have to be smart about it and make sure the numbers make sense. But it's a tool the wealthy use, and Kiyosaki wants his readers to use it too.
So real estate is one option. What other income-generating assets does he suggest? He mentions small-cap stocks, right?
Yeah. He sees those as having huge growth potential because they're often companies disrupting established industries with new products or services.
But aren't those really volatile? I've heard of people losing a lot of money in the stock market.
They can be volatile, definitely. But again, it's about managing risk through knowledge and diversification. Kiyosaki says to do your research, understand the financials of the companies you're investing in, and don't put all your eggs in one basket.
So it's about being an informed investor, not just gambling on the stock market.
Exactly. And he also encourages people to think outside the box when it comes to creating these income-generating assets. He says, find ways to get something for nothing.
Wait, that sounds a little shady. What does he mean by that?
He's not talking about anything illegal or unethical. It's about being creative, resourceful, using your assets to create more value. He gives an example of buying a property that has an extra lot of land you can sell for a profit. It's about seeing those opportunities that others miss and being willing to think differently.
Ah, okay. So it's that entrepreneurial mindset, looking for ways to create value and generate income.
You got it. And you know what's interesting? Kiyosaki argues that one of the biggest secrets of the wealthy is their use of corporations.
But how are corporations relevant to everyday people who aren't running huge companies?
He explains that corporations offer a lot of advantages for anyone looking to build wealth, including tax benefits and legal protection. He sees them as a way to separate your personal money from your business money, which is especially important if you're investing or taking on more risk.
I never thought of it that way. So you're saying even if you're just starting out, incorporating could be a smart move.
Kiyosaki definitely thinks so. He encourages learning about those benefits, even if it seems intimidating at first. There are resources to help, and he believes the advantages are worth it.
It's interesting how he keeps coming back to this idea of challenging conventional wisdom and questioning those assumptions we've been taught about money.
Absolutely. He wants people to think for themselves and not just blindly accept the status quo. He wants people to feel empowered to create their own financial futures.
And that ties back to the motivation, right? It's about believing in yourself and your ability to achieve financial success, even if you're starting from scratch.
Exactly. And that's where his concept of inventing money comes in.
Inventing money. That sounds like something out of a sci-fi movie.
He uses the example of Alexander Graham Bell. Bell invented the telephone, and he offered to sell his patent and company to Western Union for a pretty small amount, but they turned him down, thought it was a ridiculous idea. Of course, the telephone went on to become a multi-billion-dollar industry.
Wow, talk about a missed opportunity.
Right. Kiyosaki's point is that Bell didn't have a lot of money up front, but he had a valuable idea and the vision to see its potential. He basically invented money through his intelligence and creativity.
So we can all be inventors in a way, using our financial smarts to find opportunities and create wealth, even if we're not starting with a lot of money.
It's a powerful way to think about it, isn't it? It shifts the focus from what you have to what you can create.
So how do we tap into that inventor mindset? What are some practical tips for finding those opportunities and creating value?
Kiyosaki really stresses developing your financial IQ. He breaks it down into key areas that are essential: understanding financial statements, investing, markets, and the law. He encourages reading, seminars, finding mentors who can guide you. He believes that investing in your financial education is one of the best investments you can make.
That makes sense. The more you know, the more opportunities you'll see.
Exactly. He also talks about taking action, making offers, and not being afraid to fail. Be proactive, put yourself out there, and learn from those mistakes.
It's a good reminder. It's easy to get stuck in that planning phase, but you have to take action to see results.
Right. And he emphasizes you don't need all the answers before you start. You learn as you go, you adapt, you adjust, and you keep moving forward.
That's encouraging. It's about enjoying the journey, not just focusing on the end goal. But speaking of taking action, one of the most controversial things Kiyosaki says is that savers are losers. That's a bold statement. What's he getting at there?
It's definitely meant to shake things up and challenge how we think about money. It's important to remember he's not saying saving is bad. He's saying saving alone isn't enough to build wealth in today's world.
So what's the alternative?
He says shift your focus from saving to investing. Investing, he argues, allows your money to grow faster than inflation, maybe generating significant returns over time.
But isn't investing risky?
Kiyosaki's argument is that not investing is actually much riskier because it basically guarantees your money will lose value due to inflation. He encourages becoming financially literate and learning how to invest wisely to reduce risk and maximize returns. He suggests looking at different options like real estate, stocks, bonds, and businesses to find what fits your risk tolerance and financial goals.
So it's about putting your money to work in a smart way, not just being reckless.
Exactly. It's about being proactive with your finances and not letting your money just sit there, losing value.
This is really starting to paint a different picture of how to think about money. It's about abundance, possibility, and taking charge of your financial destiny.
Absolutely. And Kiyosaki really drives that home with a quote from his rich dad. He says, "Money is only an idea. If you want more money, simply change your thinking." He's saying wealth isn't about how much you have, but your mindset and your financial smarts. He wants people to have a mindset of abundance, to believe there's enough money for everyone, and that anyone can achieve financial success with the right knowledge and skills.
That's powerful. So to change our financial reality, we need to start by changing our thinking.
Precisely. It's about challenging those limiting beliefs, having a more empowering mindset, and focusing on what's possible. Kiyosaki encourages a can-do attitude, believing you can create wealth, and taking action towards those financial goals, even if they seem daunting. He stresses not letting fear, doubt, or negativity hold you back.
That's a lot to think about.
Yeah.
But where do we even begin?
Yeah.
How do we develop that financial intelligence and make that mental shift?
Kiyosaki really believes in the power of financial education. He argues that traditional education often doesn't give people the financial knowledge they need to succeed. He thinks it should be a core part of everyone's education, starting young. He wants parents to teach their kids about money, investing, being entrepreneurial. He also stresses finding financial education outside of school, like books, seminars, and mentors. He thinks investing in your financial education is one of the best investments you can make.
So it's about taking charge of our financial education and not waiting for someone else to teach us.
Right. Be proactive, be curious, be willing to put in the time to learn the rules of the game.
What are some things we can do specifically to start building that financial intelligence?
He recommends reading books and articles about personal finance, investing, and starting businesses. Attend seminars, find mentors who are financially successful. He believes in practice, patience, persistence, seeing failure as a learning opportunity, being positive about money, and being around supportive people.
Those are some really actionable tips. It sounds like taking a well-rounded approach to financial education, not just focusing on one thing.
Exactly. It's about developing a broad understanding of money, investing, and creating wealth. It's a lifelong journey, not a one-time thing.
I love that. It's about constantly learning, growing, and adapting as the financial world changes.
Absolutely. And, Kiyosaki gives a lot of practical exercises in Rich Dad, Poor Dad to help you apply these principles in your life.
Like what? Can you give me an example?
One of the most powerful is to analyze your current financial situation. Identify areas for improvement. This could be tracking income and expenses, budgeting, assessing assets and liabilities, making a plan to pay off debt and save more.
That's a great place to start. It's about knowing where you are financially and where you want to go.
Right. He also encourages looking into different investment opportunities. Find ones that fit your interests, your comfort with risk, and your financial goals. This could be researching local real estate, learning about stocks and bonds, or even exploring starting a business.
So it's about taking what you learn and putting it into action.
Exactly. Kiyosaki stresses that action is key. It's not enough to just read about it. You have to take those steps to make it real. He also encourages finding mentors to guide you. Network with investors, go to financial seminars, talk to financial professionals, surround yourself with people who know about money and will support you.
It sounds like he emphasizes having a supportive community for financial growth, being around people who believe in you.
Definitely. He thinks the right people can make a huge difference.
He also talks about creating a personal financial statement, right?
Yes. It's a document showing your assets, what you owe, your income, and expenses. He gives a template in the book to help you start. Creating a personal financial statement is important for understanding your finances and tracking your progress over time. Update it regularly to see how your net worth is doing and to make sure you're moving towards your goals. Use it to make smart financial decisions. Like, if you're thinking about taking on more debt, like a mortgage or a car loan, use your financial statement to see how it will affect your overall financial health.
That's a really practical tool, being proactive with your money and making smart decisions.
Exactly. And Kiyosaki points out, financial intelligence isn't about being a math genius. It's about getting the basics of how money works and using that to make smart choices that line up with your goals. He wants everyone to take on the challenge of becoming financially literate, no matter their background or financial situation. He believes anyone can achieve financial freedom if they're willing to learn, grow, and take action.
That's a powerful message. It's not about being born rich. It's about having the skills and mindset to create your own success.
Exactly. And that's where the motivation comes in. Believe in yourself, take charge of your finances, and have the courage to chase your dreams, even if they seem impossible at first.
It's about seeing the potential where others see roadblocks and having the confidence to act, even when you're afraid.
Absolutely. And that's what makes Rich Dad, Poor Dad such a powerful and inspiring book. It's not just about personal finance. It's about changing your mindset and believing in yourself.
Now, as we wrap up our look at Rich Dad, Poor Dad, let's go back to motivation, a big theme throughout this conversation. Why do you think this book has connected with so many people and continues to be a bestseller all these years later?
I think it speaks to a deep desire most people have. The desire for financial freedom. We all want choices in our lives. We don't want to be limited by money. Rich Dad, Poor Dad shows a way to that freedom, and it's both inspiring and gives you things you can actually do.
It's not just theory. It's about steps you can take to improve your finances no matter where you're starting from.
Exactly. And I think the motivation piece is what makes it different. Kiyosaki's not just saying what to do, he's pushing you to believe in yourself, to believe you can create wealth. He wants you to question what you think you know, step outside your comfort zone, and go after your dreams with passion and determination.
It's like he's saying it's okay to dream big and believe that anything's possible.
Absolutely. And it connects with people from every walk of life, no matter their age, background, or how much they earn.
So what would you say is the biggest takeaway from Rich Dad, Poor Dad when it comes to motivation?
I think it's this. Your mindset is everything. If you believe you can be financially free, and if you're willing to work at it, you can achieve anything.
It's about taking charge of your money and not letting fear hold you back.
Exactly. And having the guts to go after your dreams, even when everyone else is saying you can't do it. Kiyosaki's Rich Dad used to say, if you want something you've never had, you must be willing to do something you've never done.
That's a great reminder to push ourselves and try new things.
It really is. And I think that's the heart of Rich Dad, Poor Dad. It's a call to action, a challenge to think differently about money, and a reminder that we can all create the lives we want.
So, to all our deep divers out there, I encourage you to check out Rich Dad, Poor Dad for yourselves and see what insights and inspiration you find. It might just change how you think about money and motivate you to take your finances to a whole new level.
And remember, as Kiyosaki's rich dad would say, money is only an idea. If you want more money, simply change your thinking.
Thanks for joining us on this deep dive into the motivational forces behind financial success. We hope you've learned something and are feeling inspired to take control of your financial future. Until next time, keep diving deep, keep learning, and keep believing in your own potential.
It is. It's a statement that really gets you thinking, especially when we're always told to save for a rainy day, right?
Exactly.
Kiyosaki's argument is that with inflation and these low interest rates we see these days, just saving can actually make you poorer. The value of your money goes down, and you're losing buying power. He's saying we need a more active way to manage our money, make it work for us through investments, not just sit in a bank losing value.
So don't hoard cash, make it grow.
Exactly. And he thinks investing isn't as risky as people think, especially if you learn how to do it right. He sees not investing as the real risk. It guarantees your money will be worth less over time because of inflation.
That's an interesting way to look at it. So playing it safe is actually the riskiest move.
Exactly. He wants people to become financially literate and learn how to invest well, to lower the risks and get better returns. He suggests checking out different options, things like real estate, stocks, bonds, businesses, and finding what suits your risk comfort level and your goals.
So it's not about being reckless. It's about being informed and strategic.
Exactly. And he says investing isn't just for the rich. Anyone can do it, even if you only have a little bit to start with. The key is to start early, be consistent, and let that compounding work its magic over time.
It's about shifting your mindset from scarcity to abundance, believing you can create wealth and there are opportunities for those who are willing to look.
Exactly. And that's where Kiyosaki's focus on financial education comes in. He believes everyone should know about finances. It should be taught in schools, right?
Yeah.
He sees financial literacy as a basic life skill, not just something for the wealthy.
Right.
He argues that the way we teach kids today often doesn't give them the financial skills they need to be successful. He encourages parents to teach their kids about money, about investing, about starting businesses. He also stresses finding financial education outside of school through books, seminars, mentors, and online resources.
It's about taking control of your own financial education and not waiting for someone to teach you.
Exactly. You have to be the one who's proactive, curious, and willing to put in the time to learn the rules. And one of the most powerful things that Kiyosaki recommends is creating your own personal financial statement. It's like a snapshot of your financial health, showing your assets, debts, income, and expenses.
Like taking stock of your financial life.
Exactly. He provides a template in the book to get you started, and he suggests updating it regularly so you see how you're doing. It's a tool for making smart decisions, like whether to take on more debt or make a big purchase.
It's about being proactive and thinking ahead with your money, not just letting things happen.
Absolutely. And Kiyosaki emphasizes that financial intelligence isn't about being a math whiz. It's about getting how money works and using that to make decisions that line up with your goals. He wants everyone to take on the challenge of becoming financially literate no matter where they come from or what their situation is. He believes financial freedom is possible for anyone. You just have to be willing to learn, grow, and act.
That's powerful. It's not about being born rich. It's about the skills and mindset to create your own success.
Exactly. And there's that motivation factor again. Believing in yourself, owning your financial future, and having the courage to go for your dreams, even if they seem impossible at first.
It's about seeing possibilities instead of limitations and having the guts to act, even when it's scary.
Absolutely, and I think that's what makes Rich Dad, Poor Dad so inspiring. It's not just about the mechanics of money, it's about the power of changing how you think about money and believing in yourself.
Well, as we wrap up our deep dive into Rich Dad, Poor Dad, let's revisit motivation, that recurring theme. Why do you think this book is connected with so many and stayed a bestseller after all these years?
I think it speaks to something so many of us want. Financial freedom. We want choices. We don't want to be held back by money. Rich Dad, Poor Dad offers a way to get there, and it's both inspiring and practical.
Right.
It's not just theory, it's things you can actually do to make your finances better wherever you're starting from. And that motivational element sets it apart. Kiyosaki's not just telling you what to do, he's pushing you to believe you can create wealth. He's saying, question what you think you know, step outside your comfort zone, go after your dreams with everything you've got.
He's giving you permission to think big and believe anything is possible.
Absolutely. That message speaks to people everywhere, no matter their age, background, or how much they earn.
So what would you say is the most important thing to take away from Rich Dad, Poor Dad when it comes to motivation?
Your mindset is everything. If you believe you can be financially free and you're willing to work at it, you can achieve anything.
It's about taking control of your money and not letting fear or doubt stop you.
Exactly. And it's about going after your dreams even when people say it's impossible. Kiyosaki's rich dad used to say, if you want something you've never had, you must be willing to do something you've never done.
That's a great reminder to push ourselves and try new things.
Absolutely. And I think that's the essence of Rich Dad, Poor Dad. It's a call to action. It's a challenge to change how we think about money. And it's a reminder that we all have the power to create the life we want.
To all our deep divers, I encourage you to check out Rich Dad, Poor Dad and see what you can learn from it. It might change the way you think about money and motivate you to take your finances to a whole new level.
And remember, like Kiyosaki's rich dad said, money is only an idea. If you want more money, simply change your thinking.
Thanks for joining us on this deep dive into what drives financial success. We hope you learned something valuable and feel inspired to take charge of your financial future. Until next time, keep diving deep, keep learning, and never stop believing in your own potential.